Most people think they need thousands of dollars to start investing. And I get this question every single day. How much money do I need to get started? The truth is, you can start getting dividend income from $0. You can start building from nothing. In this video, I'm going to show you the exact system that I call the Dividend Ramp. It's part of the same strategy I use to go from nothing to financial freedom abroad. Now, this is part of the Freedom Abroad Blueprint course. If you haven't seen it, I suggest you go to my channel. Here's my channel homepage right here. Go to playlist at the top. And if you click on the playlist, you will see right here the Freedom Abroad Blueprint program. If you view the full playlist, see the first video is lesson 1, the second video is lesson 2, so on and so forth. The last video is the Dividend Nomad method, and this strategy I'm sharing with you today is part of this Dividend Nomad method. This is basically the first step of the Dividend Nomad method. So I'm going to break the first step down because it's probably the most important step in the Dividend Nomad method. So if you haven't seen these, I suggest you go back and watch the first one. So anyway, let's get into today's course. So let me start right here with the quote that we started with last time. A dollar invested is a worker hired to work for you for the rest of your life. So first of all, the Dividend Ramp. What is it? It's really simple. It's just how I start to build income from $0 in real actionable steps. This is the exact method that I used to get started. And I'm going to share with you guys how that worked today. Now, if you don't have much money to invest, this is the best way. But if you do have money to invest, that's great. You can adjust this how you see fit based on your budget. Like I would suggest a minimum plan, let's say $40 a week or $150 a month, something like that. If you don't have that, $5 a week, anything a week is better than 0 a week. But if you can swing it, try to start with at least $40 a week if you can, or $150 per month if you can do that. If you can't, that's fine. If you can do more, that's wonderful, do more. But let's get into this. Small steps beat waiting. This is part of the mindset portion of this. If you watch the first 4 lessons of this course, they were all about mindset. And this is going to make a lot of sense to you once we get going here. But you need to get rid of that mindset that you need a lump sum to begin, because you don't. You can start from 0. So even if it's just $5. Consistency beats the hero moves. You see these guys, on YouTube, and they have millions of dollars and they make these plays and make thousands of dollars every single week and all this and that, right? They hero moves. Hero moves don't work for everybody, especially if you have a limited amount of money. Consistency beats hard work. I've seen these guys do hero moves and they try to do more and more hero moves and they end up losing everything. Consistency will beat hard work at the end of the day. Don't be a hero, be consistent. And why? Simple, because weekly progress builds habits. If you can start putting money aside each and every week to invest, that's going to turn into a habit. And that habit will turn into huge momentum that's going to carry you to where you want to be. So for me, I choose weekly paying ETFs, but you could also choose monthly. But why do you want to do that? Because the frequent distributions, they feel like a paycheck, and that keeps you motivated. For me especially, like I know each and every single Friday I'm going to get paid because the things I invested in pay weekly. And it keeps me motivated because I see that paycheck come in this week and it's whatever, $50, and I think, oh man, when I put this money in next week, that $50 is going to be $55. And then next week it's going to be $60, right? It's going to grow, grow, and grow. And that seeing that growth each and every week keeps you highly motivated to go after it and to even try to find more money to put into it to grow it faster and faster and faster. It's a huge motivation as opposed to getting paid every month or every quarter, which seems like it takes forever. And it seems like it's going to take a long, long time for your portfolio to grow and get where you want to be. So I choose weekly for that specific reason. And also, Index-based funds reduce single stock headline risk. So we talked about this in the previous video. Something like an S&P 500 fund, like XDTE, SPYI, something like that. Something that's based on the index as opposed to a single stock. Because you invest in one of these mega yield single stocks, and Michael Saylor goes and does some douchebag thing on the news and his stock tanks, you lost your money. If he does that, or Elon Musk does that, and Tesla tanks, the S&P 500 still has 499 more stocks in it. That's going to keep the ETF stable, and it's not going to crash because some douchebag said something, right? So, and I choose funds that distribute weekly or monthly, but I prefer weekly just for the cadence. That's just for knowing that every week paycheck's coming. This Friday, paycheck's coming. Next Friday, paycheck's coming. I know exactly when they're coming, and they come fast and frequent. And I like that. And if you want to know when a fund pays, just check the fund's distribution schedule, because every fund varies. Some funds pay on Thursday, some pay on Friday. So you can go to the official website. So if it's a Yomax fund, go to Yomax ETFs. If it's a Round Hill, go to Round Hill ETFs, NEOS, whatever. You can just Google the name and go to the website, and you can see the distribution schedule, and it will tell you exactly when you're going to get paid. And so next, let's talk about automating or dollar cost averaging and setting up your drip, what that means and how to set all this up. So first of all, you need to open a brokerage account that supports auto invest and drips. So what is auto invest? Auto invest is whenever you have some cash in your account. For example, if I'm going to invest in XDTE, which is one that I like, I can set up my account where it buys, say, $40 a week. Every single week on Friday, it's going to buy me $40 of XDTE. I can set my account to do that. And every week, my account just automatically buys XDTE at 9:30 in the morning, $40, bam. Next week, $40, bam. It does it automatically. You can set your account up to do that. So you don't have to have any stress about, is the market up, is the market down, is it a good time to buy, bad time to buy. You overthink all these things, and then you end up doing nothing. Where it's just automatic, it just buy, always buying no matter what the price is. And then also drip, it's just whenever the ETF pays the dividend, instead of the dividend going to cash into your account, drip just means it's a dividend reinvestment program. So what that means is when the stock pays the dividend, it goes right back into the stock, which means you get more shares of that stock instead of getting the money. So they'll just buy you more shares. Okay, and then I would schedule my contributions, the money I put into the portfolio, I would schedule that to match my paycheck cadence. So if you get paid every single week, put money in your portfolio every single week. If you get paid bi-weekly, right, put the money in the portfolio when you get paid every 2 weeks. Or if you get paid every month, like most people in Asia do, then every month put the money in the portfolio. Just whenever you get a paycheck, money goes in. And then reinvest your distributions unless you really need the cash, right? DCA, dollar cost averaging, it just means buying at a certain time, pretty much all the time. It reduces timing risk. You don't think about, is the market going up? Is the market going down? When do I buy? You don't think about none of that. You just buy at this set time every single week, no matter what. So it reduces that risk. And also drips, they basically compound your returns over time. It's just always buying more and more and more. So every week you have more stocks that are paying more money because you get more and more and more every week, right? So that's why drips are very useful. So set up your first milestone. I would recommend something like $100 a month, and I'm going to tell you why this number. Like, look at this dude. Look, he paid his bill. He's got extra money left over. I see it in his wallet. But $100 a month, you're looking at $1,200 per year. And it's often enough to cover a bill, whether it be a phone bill or a water bill or some other small reoccurring bill that you have each and every single month. $100 will probably cover that, right? So this is a good milestone to shoot for, is enough money to cover at least one of your bills. Because if you're getting enough passive income from doing absolutely nothing and it's paying one of your bills, now you can even have more money to reinvest because you don't have to worry about that bill anymore, right? So I would shoot for something like $100 a month is my first goal. Basically a milestone goal, getting one bill paid by your dividends. It gives you some mental space and just motivates you for reinvestment. Because once you see that, okay, I've got this bill paid with my dividends, now if I keep putting money here, I'm gonna be able to pay that bill too. And next thing you know, 2 bills are gone, 3 bills are gone, your house payment is gone, and next thing you know, the money you're making from dividends is more than all of the expenses that you have, which means you have reached total financial freedom when your dividend income pays for everything that you need to pay for in your life. And that's when you can finally leave your job, right? So let's do some math, give you some examples behind the principle you need for $100 a month based on this idea of index-based ETFs. So a 6% yield, something like a JEPI, J-E-P-I, it's an S&P 500 fund, it's got about a 6% yield, right? So to get $100 per month from this, you basically need $20,000, which is a lot of money, right? And this one pays every month. Now, if you go a higher yield, like a 12 or 13% yield, something like a SPYI, which is the same group of stocks, it's also trading the S&P 500, but it's got a higher yield, also pays every month, but you only need $10,000 there to get that $100 a month. Now, if you choose the route that I chose, which was XDTE, it's got about a 26% yield, which means you only need $4,800. And for me, in my small account that I started growing from scratch, I just put the money I earned from YouTube in there, $150 to $300 a month. And I achieved this more than $100 a month. Actually, last month I had $200 in dividends in that account. And it took me less than a year to get that far. So this can compound pretty quick if you're choosing the right stocks and following the Dividend Nomad method. So here are a few rules and some things to avoid early on when you're first getting started. So number one, don't start off by chasing the ultra high single stock mega yields like MSTY or Misty or HOOY, Hui, or some Palantir or PLTPW, whatever, these single stocks with these 100% yields, don't start that way because all it takes is one small mistake and your money gets, bam, knocked out just like that. And your dividends will be lower and lower and lower. You want consistency to start with. That's why I say choose a core index-based or diversified income fund. This is going to be your main core focus, is the index-based diversified income fund. Preferably pays every week, in my opinion anyway. Also, if you look at all of my accounts I share here openly for free, I keep a small cash buffer for timing and for buying opportunities. I see some new stocks coming out. Some of these guys, I see them in this Discord and stuff talking about, oh, I wish I could buy that. But they're using margin, and they're using so much margin. They have zero cash in their account, and they don't have any cash that they can put in their account because it's just going to pay their margin, and they can't buy these stocks because they don't have any cash. So I always keep cash in my account. So if a good opportunity comes up, I'm prepared and I can buy it. So small cash. Define your position size and rules and your exit rules for the momentum plays. And this is based on my last video for the high momentum, high yield plays, right? Set some rules, set a position size. Don't go crazy with them high yields. So really fast, give you guys a short checklist, a 7-day action plan to get started. So number one, open your brokerage account that actually supports drip and auto invest, right? Not all accounts have this, right? I prefer Charles Schwab. That's what I use. They have auto invest, they have drip. I know some others do. I think Robinhood does, but I prefer not to use Robinhood. I mentioned that several videos. But anyway, choose a brokerage that supports drip and supports the auto invest function. Also, pick one index-based weekly or monthly paying income ETF to start. Okay, and then research the payout schedule of that. How often does that pay? When does it pay? Next, set up your $40 a week or $150 a month or $80 every 2 weeks, your auto transfer from your bank to your brokerage account. You can set that up to pay your brokerage every single week or every single payday, right? Just set it up automatically. You don't need to think about it. You just wake up and your money's in your brokerage account, right? That's the best way to do it. Enroll in DRIP, right? So if you don't need the cash dividends in your pocket right now, just drip them, let them drip, and let them keep reinvesting into the fund to grow your shares larger and larger. And I'll show you an example of that in a minute. Write your first milestone number. Is it $100 a month? Do you only need $50 a month to pay a bill? Like, just knock out your smallest bill first. How much of the money do you need to pay that bill? And work on getting those dividends enough to pay that bill. And just calculate how much money do you actually need invested in order to create enough money in dividends to pay that bill. And then track your progress weekly and celebrate the wins, right? When you get paid a certain number, the number you're looking for, $50 a month, $100 a month, celebrate that, right? It's a big thing. You're taking big steps here that most people aren't taking. It's okay to celebrate. Okay, so the last part right here, a quick challenge for you guys and your next step. So I got a little exercise for you guys to do. Set your first income target. Write it down. How much money do you need? Right? What's a bill that you can pay? What's your first target? How much money do you want to get as soon as possible? Okay, calculate how much money you need invested to reach that based on the yield. For example, in XDTE, 26% yield, you need about $4,700, $4,800, right? Calculate how much you need in order to reach your goal. Next, set your schedule. When are you going to transfer money to your brokerage account? Is it every week? Is it every Friday, every other Friday? Like, when are you going to put your money there? Set your schedule and stick to it. Also, right, keep track of it, right? Log your first contribution, right? Like, write down, on September the 10th, I deposited $100 into my account. Then September the 17th, I deposited $100 into my account. Like, keep track of it, how much you're putting in, what the balances of the account, keep track of all that stuff, and it really helps you stay focused and keep your eyes on the prize. So lastly, as promised, I'm gonna take you guys into this brokerage account really quick. This is my Charles Schwab account, and you see up here at the top where it says reinvest, and see it says no. If I want to turn it on, this don't have a dividend, but these do down here. See, it says yes. You can click this, and you can see here, like QQQI, reinvest dividends, yes or no. You just click yes, and then click update, and bam. Now you don't need to do nothing. You can sit back, and every time this pays a dividend, it will just go right back and add shares to your stock. So just to give you a quick example, if you look over here, maybe, if you look, where's my shares at? Quantity right here on the left. See, it's highlighted right there where my mouse is. See, 55.22. Instead of 55, it's 0.22 because it paid a little bit of money into itself. Look at this one, 350.411. It's on drip. When it pays a dividend, it goes back and gets me some more shares, right? So your brokerage will give you partial shares, and you'll get paid dividends on those partial shares too. So reinvest your dividends. And if you thought this was helpful, I'd love to hear a comment down below. But I highly suggest you check out all the other videos. And also, we got some links down below: free Discord, free newsletter. This is the free course. Check all that stuff out, and I'll see you guys on the next video.